Bitcoin still looks fragile, yet US spot ETFs just took in roughly $500 million across 4 straight sessions. That reversal came immediately after a $424.7 million outflow on July 13th, making the surface price action and the underlying demand tell different stories. From July 14th through July 17th, those funds recorded about $500.2 million of net inflows. The question is whether ETF-linked demand has truly returned, or whether this is only a temporary pause in the selling. The sequence matters more than a single green flow number. Far side data show $181.1 million entered on Tuesday, followed by $107.7 million. Wednesday, $79.1 million Thursday, and a $132.3 million Friday. That 4-day recovery slightly exceeded Monday's outflow, leaving the 5-session net at only about $75.5 million. So buyers returned, but they have not yet created the kind of overwhelming liquidity wave that would settle the argument. This helps explain why ETF demand and price can appear disconnected. New fund creations can produce underlying Bitcoin demand, but their market impact is not always immediate or one-for-one, because timing, hedging, and broader crypto positioning also matter. During Schwab's Friday morning snapshot, Bitcoin was still near $63,140 and down roughly 1.9%, even as the week's ETF flows were improving. Price showed hesitation, while the flow data showed supply was being absorbed. That divergence is useful, but it is not automatically bullish confirmation. 4 positive sessions can represent dip buying, portfolio rebalancing, or traders rebuilding exposure after a sharp washout. It does not prove that forced selling is finished, that leverage has reset, or that Bitcoin has formed a durable bottom. Treating $500 million of inflows as a guaranteed rally would confuse evidence of demand with proof of trend. The next decision point arrives when US markets reopen. Confirmation would require ETF inflows to remain positive, while Bitcoin stops printing lower lows and begins holding gains rather than surrendering them. Invalidation would be a renewed wave of outflows large enough to erase the recent recovery while price breaks below its latest local structure. The strongest signal will come if price and flows begin moving in the same direction. The calm verdict is that ETF buyers have returned, but only enough to change the question, not answer it. Bitcoin is no longer facing the same one-way ETF pressure seen at the start of the week, yet the 5-session net remains modest. That makes Monday's ETF data more important than any isolated weekend candle. Price is the surface. The message is whether this returning liquidity stays.